Welcome to Double Up, where we invest in Canadian stocks and try to double our money in a year. Right now, I'm going to show you what we've done so far. This is where we're going to start. We've added about $10,000 just to get started around June. Now it's August and we've been able to grow that portfolio by a few thousand. And I'm just going to show you around and show you the stocks that I've used to grow this so far. First off, we'll start with Apple. I think over time what we're going to do is move into Canadian only stocks. But I started off with different kinds of stocks, some US, some Canadian. One stock that pays me dividend has been really good to me so far is Apple stock. It's been reasonably volatile over the last year, but long term it's been steadily growing, and it's just a very high performing stock in general, and I think it still has a lot to go. Apple has been able to release some products, and I think its diversification into services, it has a potential to really grow. Air Canada is another stock that I'm investing in. This is a Canadian stock. Over the last 5 years, it's done pretty well, but COVID was able to eat up a lot of the resources. So I think this is just a matter of things opening up in Canada and then coming back to its proper location. But, that's something that I think might be more long-term, but we'll see. We've put in some money into the stock to see how it performs, and I think it has potential once things open up, but we'll see. Another stock I want to show is this Ether, which is an ETF, unhedged Canadian investing ETF essentially. It basically tracks Ether. So if Ether performs well, this performs well. It's been doing well recently. It's a pretty new ETF, and over the last year, it actually started off in April 22nd, and crashed for quite a while because it follows the Bitcoin and Ether and basically the cryptocurrency trend, but it's been able to recover along with cryptocurrencies. So it's going to be a volatile ETF and something that you want to invest in with an understanding that it's going to be risky, but I think this might be an opportunity to do well. You can see here that it's gone up by about 41% over the time that we've been able to invest in it. I actually invested a lot more into the stock, but I sold at a particular point just to give me some more liquidity, and so I could reinvest in other positions as I continue to grow this portfolio. So if we go back, another stock that might be really useful for us is Tesla. Tesla's been growing consistently over the last few years and exponentially grew in 2020. I think a lot of investors poured money into the stock, and now it's pretty high, and actually went through a stock split early or mid to 2020 or so, somewhere around there. This is another American stock. I think we'll eventually divest out of American stocks and focus more on Canadian stocks, but this is where I'm starting. I just want to be as transparent as possible, and it's done very well for us. I've been 40.92% return over the last over the period in which I've owned the stock. But I had a little bit before the stock split and all that, so there's a little bit of outsized returns there, and also bought quite low around 580. So, and some of the more stable stocks we have are Microsoft, which has been steadily growing for the last few years. It's a very old stock, but pays dividend at a certain percentage, pretty reasonably high percentage, and almost seems over the long term reasonably linearly growing. So it's the stock you can really bet in. So I'll be dollar cost averaging in as it dips, but this is a great stock to own over the long term. And Coca-Cola, which is the most old school of old school stocks. It fell quite a bit in 2020, but I think it's guaranteed to reach its pre-COVID levels because it's such a stable stock. It's international, and it's contingent on international trade because it's such a big company. So once those things stabilize, and you can see it's almost linearly growing on average over since it fell. So I think it has the potential to reach its pre-COVID levels, and I think this is a buy in the long term. So I think we can really make some money. Right now it's at 56. It fell from 59, so it's almost there. So you can make, if you buy now, you make a little bit of outsized returns, but it's only slightly cheaper than it could have been if you bought earlier. But I did buy recently, so we'll see. Hopefully this stock continues to grow. And yeah. So those are some of the intro stocks. Again, the goal of this channel is to double the money we have here by next year. Please support this endeavor. Below you'll see a Wealthsimple link where you wanted to sign up. You get 2 free stocks, and there's a little bit of kickback if you use my link. So please do so, and thank you for watching.